It's 2:47 in the morning. You're asleep. Your phone is charging, your car is parked, the lights are off. Everything, as far as you can tell, is still. Your money is not still. Right now, as you sleep, your money is being lent out, traded, invested, leveraged, moved across borders, used to generate profits for institutions you've never heard of, and almost none of it will come back to you. At the end of every single business day, when the last teller window closes and the last ATM is restocked, every bank in America does something that most of its customers have no idea about. It goes to market. At precisely midnight, banks calculate their positions. How much cash came in, how much went out, what their reserve balance looks like, and if they have a surplus, money they don't need for overnight operations, they lend it. Not to you, to other banks. 4.33% overnight. That's what your bank earns every single night, lending your deposits to other banks. What does your savings account pay you for those same deposits? Average savings account rate at major U.S. banks, 0.40%. The bank earns 4.33% overnight. You earn 0.40% per year. The spread, the gap, is the highest it has been in modern history. That gap, that distance between what your bank earns on your money and what it pays you for the privilege of using it, has a name: net interest margin. And in the fourth quarter of 2025, the U.S. banking industry's net interest margin hit 3.39%, the highest level since 2019. The banks are not hiding this. It's in their quarterly earnings reports. It's published by the FDIC. The numbers are public. The transaction is perfectly legal. You just were never meant to notice. While you sleep, the world's financial markets are open. The foreign exchange market, where currencies are bought and sold, trades 24 hours a day, 5 days a week. More than $7.5 trillion changes hands in the forex market every single day. That is more than the annual GDP of every country in the world, except the United States and China, traded in a single day. The gold market trades almost around the clock. Oil futures, government bonds, cryptocurrency, and now, American stocks. As of 2025, extended hours trading in U.S. equities accounts for more than 11% of all trading volume, more than double what it was in 2019. Major brokerages, including Charles Schwab, Robinhood, and Interactive Brokers, now offer trading sessions that run from 8 p.m. to nearly 4 a.m. Eastern Time. NASDAQ has announced plans for 24/5 trading, around the clock, 5 days a week, by the second half of 2026. The New York Stock Exchange is following. The market that once rang a closing bell at 4 p.m. is becoming a market that never closes. And the people best positioned to profit from that are institutional investors, hedge funds, banks, algorithmic trading systems that run 24 hours a day. While you're asleep, algorithms are scanning earnings releases, economic data, geopolitical events, social media sentiment, weather patterns affecting commodities, and shipping data, and executing trades in microseconds based on what they find. A study by researchers Werner, Eaton, and Schilko found that overnight trading, from 8 p.m. to 4 a.m., costs retail investors 3 to 6 times more in execution costs than trading during regular hours. Why? Because liquidity is lower. The rules protecting retail investors don't apply, and the professional players know exactly what they're doing while you're asleep. The market doesn't sleep. The algorithms don't sleep. The institutional investors don't sleep. And every hour the market is open while you're not watching is an hour where your informational disadvantage is at its maximum. The markets run while you sleep. The banks lend your deposits overnight. But both of these pale in comparison to what compound interest is quietly doing, or not doing, to your money, hour by hour. There are two versions of compound interest. And while you sleep, both of them are running. The first version works for you. The second works against you. Here is how the first one works. You invest $10,000 at an average annual return of 7%, a conservative, historically grounded assumption for a diversified stock index fund. You go to sleep. You wake up the next morning. You have earned roughly $1.92 overnight. After 1 year, your $10,000 has grown to $10,700. After 5 years, $14,000. After 20 years, $38,000. After 30 years, $76,000. $76,000 from $10,000 invested. Earned in large part while you were sleeping, commuting, working, raising children, living your life. You did not work for that money. Time and compound interest did. Now, here is the second clock, the one running against you. The same $10,000, but on a credit card at 20% annual interest, making only minimum payments. You go to sleep. You wake up the next morning. You owe $5.48 more than you did the night before. Just from sleeping. Over the course of a year, that $10,000 debt generates $2,000 in interest charges, even if you never use the card again. And because you're paying only the minimum, the principal barely moves. You're running on a treadmill in the dark. The average American household carries $10,479 in credit card debt. At 20% APR, that generates $2,095 in interest per year, 5.74 every single night, while the cardholder sleeps. Most of them don't know this is happening. The first clock, compound growth, rewards patience and time. The second clock, compound debt, punishes inaction and time. They are the same mathematical mechanism, running at the same speed, in opposite directions. Warren Buffett has said that his wealth is almost entirely a function of compound interest operating over a very long time. He has also said he could explain the entire concept of wealth building in 3 words. Start early. Wait. 3 words. 50 years. And most people never do it because the results are invisible at first, and compound interest doesn't become dramatic until the clock has been running for a very long time. One clock grows your wealth while you sleep, the other erodes it. But there is a third force operating overnight, one more invisible and arguably more powerful than either. It doesn't appear on any bank statement, it has no line item, and it has been running every night since 1971. Here is a fact that almost nobody internalizes, even though it is mathematically certain. Every night you sleep with uninvested cash, you wake up slightly poorer than you were the night before. Not because anyone took anything from you, because of inflation. At 3% annual inflation, roughly the Federal Reserve's long-run target, $100 loses approximately 1 cent of purchasing power every single day. 1 cent. Small, invisible, meaningless. But compound that over 5 years, 10 years, a lifetime. $100 in 1971, the year the gold standard ended, requires $8.03 today to buy what it bought then. In 54 years, 92% of its purchasing power dissolved overnight, 1 cent at a time. Now scale that to real money. The average American household holds approximately $17,000 in liquid savings. At 3% inflation, that household loses roughly $510 per year, $14 per day in purchasing power, $17,000 in savings, less than 9% inflation, go $510 lost per year in purchasing power. That is $140 every night you sleep, without a single dollar being spent, moved, or touched. The Federal Deposit Insurance Corporation reports that the average interest rate paid by U.S. banks on savings accounts is 0.40%. Inflation runs at 3%. The real return on a standard savings account is negative 2.6% per year. You are not saving money in a savings account. You are losing money slowly in an account that feels like saving. This is not an accident of policy. It is the deliberate design of a system built on the idea that idle money is wasted money. Inflation is the built-in incentive to invest, to spend, to deploy capital, because holding cash is penalized by design. The wealthy understand this. They don't hold cash, They hold assets, businesses, equities, real estate, commodities that appreciate with or ahead of inflation. The gap between the asset holders and the cash holders widens by approximately the inflation rate every single year, every night, while everyone sleeps. The bank earns your deposits overnight. The markets trade without you. Compound interest runs on either side of your net worth. Inflation drains cash silently. And all of this, every act of this story, leads to the same conclusion. The most important act of all. Everything we've covered in this episode, the overnight lending market, the 24-hour trading floors, compound interest, inflation, describes a system that runs continuously, invisibly, in the background of your financial life. That system is not going to stop. It is not going to slow down. It is not going to ask your permission. The only variable is which side of it you are on. Every night, someone is on the receiving end of the overnight lending spread, earning 4.3% while paying depositors 0.4%. That someone is a bank. It could also be you if your money is in a high-yield savings account or money market fund that passes through competitive rates. Every night, compound interest is running. On credit card debt, it charges you. On invested assets, it pays you. The only difference between those two outcomes is the decision of where your money sits tonight. Every night, inflation moves purchasing power away from cash toward assets. Real estate appreciates. Businesses grow. Stock indexes reflect the nominal growth of an economy that expands, in part, because inflation is built into its structure. The difference between Path A and Path C over 20 years, starting with the same $10,000, is $27,861, earned largely while sleeping. The only cost, the decision to begin. Warren Buffett has slept approximately 40% of his life, roughly 34 years of his 94 years on Earth. During that time, his investments compounded continuously. He did not pause them for sleep. He did not pause them for weekends. He did not pause them for illness, for grief, for travel, for distraction. Compound interest does not take days off. The question you need to answer before you go to sleep tonight, the only question, is this. While you sleep, is your money working for you? Or is someone else's money working with yours? It's 2:47 in the morning. You're asleep. Somewhere, a bank is earning 4% on your deposits and paying you 0.4. Somewhere, an algorithm is executing trades on the Tokyo Exchange. Somewhere, inflation is quietly reducing the value of every dollar that isn't growing. And somewhere, for the people who understood this, compound interest is silently building wealth that will be there when they wake up. The night is not neutral. It never has been. Every hour of every night, money is moving, interest is accruing, prices are shifting, markets are pricing in tomorrow. The only question that has ever mattered is which side of that movement you are on. Subscribe to the Money Facts Lab. And before you go to sleep tonight, ask yourself the question this episode leaves you with. What is your money doing right now? I'll see you in the next one.